morning everybody, it's Christian from Serene Education with the 4 Majors Notice Update for the 2nd of July 2012. Hi guys, hope you had a fantastic weekend with family and friends. And looking at the markets this morning, Monday, let's have a look at the weekly to see what happened last week on Euro against US dollar. Well, you can see for the past month we've seen some upside movement after that bounce we saw in early June. And since then, not really making any real movement. Primarily, if you look back to early January of this year, you can quite clearly see a hesitation area around here. And that tends to play out with that 126500 that price is actually attempting right now as we speak. So you can see that price has for the past month been testing this 1265 and finding resistance. So we had the breakouts, we had the pullback. You can see here price fell over here. Then a reattempt and price fell away from it, and then a reattempt again. So we've had 1, 2, 3, 4, 5. This is our 6th week now of price now trading at this level, at the 126500 on our weekly. So as long as that remains, and obviously then price is looking as this area has a potential resistance level. If that becomes potential resistance, then price is obviously going to give way to further downside movement. Notice the overall trend for this pair is very negative. You can see that the institution moving average, you can see the price is trading below the institution moving average since September of 2011. Most CTCs all in our favor. Our histogram very much so is the one we should be looking for long term. Yes, we're going to have a bit of blue in between it, but overall the sentiment is still very negative, and you can see that gap between the 2050 and the institution very wide. So it's telling us that sentiment is very negative indeed. So if this 126500 happens to continue to be this major resistance, then ultimately we should be looking for price action to fall away from it. The other scenario would be to see price, if there's genuine move to the upside over here, for example, this consolidation on the underside, if this was to move from more of a bearish stance to a bullish intermediate stance, then we do need to see 1265 being breached, and we do need to see this weekly candle being a bullish engulfing. Notice yesterday, or last week in particular, more action of the upper 50% of this wick, this trading wick, okay, which is a good signal. It's trying to do its utmost to try and break this sentiment, this negative resistance over here. But we do need to see a bullish engulfing candle to obviously confirm to us that that sentiment is generally tackling higher highs. So if we go back into our weekly chart, daily chart, let's have a look at that 126500 mark. Always put these areas down. So if we draw a horizontal line, make it nice and thick. Change the parameters here to 1265. There we go. Apply, and you can quite clearly see, if I just zoom out, you can quite clearly see that low in January, for example. Look what price has been doing since the break here and latter May. And then we see a pullback, a failure, a reattempt, a lot of hesitation. This shooting star here, this massive candle that caught a lot of people out. I can guarantee you price moved higher, bearish engulfing. So this was almost like an evening star formation over here at a resistance level, and price has fallen away. Friday, however, very interesting. Massive move to the upside. However, consolidating. Notice price not trading any higher than that 1265. And then this morning on the Asian session, going to the European session, you can see price hesitating. Not a very strong candle at all, but it's still early days. Still a lot can happen today, but as you can see, price on Friday tackling those 126500. What we do need to see, and I mentioned, if this is to remain potential upside favorite, we do need to see that 1265 being breached, and we do need to see a nice bullish engulfing candle getting away from 1265 as early as possible. If that was to occur, then we can look at our Fib retracement areas. Okay, you take the high here that we saw that selling at the start of May all the way down to the beginning of June. You can see the 23.6 retracement, 38.2. See, price is failing to get above that 38.2 just at the 1265. Failing indeed. It does need to get above that, and also in doing so, it'll penetrate the 50% line here, moving average, and then we should be tackling that 50%, which happened to be the prior resistance of here, or hesitation area, and then we head off towards that the 12900, but ultimately 1300, which will happen to be that major support and resistance we broke before we saw this negativity really taking hold of back in May. Okay, so looking for any further momentum, we do need to see a break and hold above at least the 1270. If not, we're going to see further resistance here at this 38.2 Fib retracement area on our daily. And as long as we see that, then obviously we should be tackling these areas back towards the 23.6 until such time as we see a break of this 38.2. Moving on to sterling, let's have a look and see what's been happening on the weekly chart. Also a noticeable bounce, but in this case, 15,300, guys, right down here. Make it nice and big, make a note of it. Sterling 15,300, a major support. If I zoom out of here, you can see going back to 2009. If you look at late 2010 onwards, notice hesitation here. Look at that. Nice support through August, September, October of 2010. Then December, January of 2011. Then September, October, November of 2011. Then January, the start of 2012, and June of 2012. A lot of bounce. A lot of support bounce over here. Consolidation at this round number at 15,300. So that becomes a very, very strong support and resistance level. Must make a note of it. Selling into it. Notice bounce. A lot of selling into it. A lot of negativity into this major support and resistance level. Price didn't even fail to break through it. It just bounced on it straight away. And we've seen upside movement since. Consolidating now at the 15.75 mark. And if you take the high over here when we saw the selling in early May to these lows here in start of June, you can see on our Fib retracement, the 23.6 price finding support, moving higher towards the 38, and then coming unstuck at the 50% line. Notice all the moving averages, guys, very close, very tight. Not a lot of decisiveness in this consolidative range. And notice where the institution moving average is above price, acting as a clear resistance level. Okay, so it needs to be trading above this 15,800. Okay, ideally should be trading well above 1,600 because 1,600 is also a major support and resistance level, a very strong consolidation of range, support and resistance level going back a number of months. So 1,600, ideally long term, needs to be trading above that 1,600. In doing so, you'll be trading above the institution moving average, which is a clear sign that long term price is looking positive for the foreseeable future. But as long as price is trading below that institution moving average on any time frame, it's a negative outlook. And you can see on a weekly, still trading below the institution moving average. Yes, we've had a bounce, but it's just a corrective move after a lot of selling through May. This could be just taking profits before we could see price finding resistance clearly through here. You can see we had 3 consecutive weeks where price has failed to actually break above the 50% line here at the 15,900. The longer it does so, the longer it looks like we're going to see price sentiment just giving up, and we could see further bearishness. Without that, if that was the case, then ideally we want to see a close below the 38.2. This is our weekly now. We want to see a close below the 38.2, which would then target for us our first target would be down here at 23.6 at the 15,500 mark, followed by that all important 15,300 below us. So if we look at the daily, notice straight away where the institution moving average is. It is above price. It acted a resistance not too long ago in mid-June. Notice the CTC, guys. Very much red on the other side. Yes, we've had a bounce, but you can see that 15,700, a major resistance level. A lot of prior support, a lot of resistance before. So 15,700, a very strong support and resistance level. So you take these highs here in May to the lows here in June, the start of June. You can see straight away that 50% retracement level clearly above price as we speak. Okay, so the 15,800, 1575, that is a no trade zone, guys. Clearly hesitation between these 2 points. Okay, so that would be a out of bounds no trade area. Okay, ideally if this is to be positive, it needs to be trading above the institution moving average. As I mentioned, you can see prices failed at the institution moving average. CTC is definitely red. Yes, we've got blue across the board, but we don't have all 4 parts being blue. It still remains red. The sentiment, this bounce over here is still, it's just a consolidation against the major overall downtrend. Okay, it's got to be trading well above 1,600 to be long-term classified as a bullish trend. So I'm just going to put that in. You must always put all these major support and resistance levels in, guys. Support and resistance trade lines are very, very important. Okay, none of these templates will mean anything unless you actually apply the simple principles of trading, which will be support, resistance, and trends. Okay, you've got to know where prices come from. Is it trending? Is it oscillating? Is it consolidating? Why is it consolidating? Look at the support and resistance levels. It'll all draw a picture. Okay, so as long as we're trading below 1575, then ultimately we could see consolidation with an outlook of it being negative for the foreseeable future. Got to get above 1575, 15800 to even contemplate looking for long-term bullishness for this pair. Let's move on to the Swiss franc. Good old Swissy. Let's have a look at the weekly. Here, very indecisive after tackling a very strong support and resistance level here at the 9600, 0.960 or 9600. Price support and resistance. Make a note of it, guys. Very important. See this clear hesitation through October, November, December, January, February of 2011 going into 2010 going into 2011. And then further resistance here at the start of January 2012, and we've come into contact here again in late May, early June, and now you can see price is trading at the underside of that. Got to be trading above that to see any long-term continuation to the upside. Notice our CTC on our weekly, we have gone blue. However, we are trading below a major resistance level. Got to get above that 960, guys. Psychologically, we have to be trading above that to see any further extensions. Otherwise, this template this template buy signal that's produced is null and void. Okay, it's giving us blue, 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 blue. However, we are trading below a major support and resistance level, 960, until such time as it gives us a nice bullish engulfing to see any further attempts of at least the one parity, which is going to take us back to the institution moving average on our weekly charts, which will concur with prior support and resistance way back in 29 and etc. And then we are sitting on our fingers or hands until such time as we get a bullish engulfing close. Okay, so at the end of this week we do need to see a nice bullish engulfing close above 960. Okay, we don't want to see a little candle like that because that's a very indecisive candle. There's more happening at the bottom of this 50% wick than above it. Okay, very important. We want to see positiveness. We don't want to see an indecisiveness around a major support and resistance level. Otherwise, it's just not a clear signal, a true signal of purchasing, of buying power. And if we don't get that, we don't trade it. Okay, so our daily, also major support and resistance level. Put all these areas. And look at this. We actually saw price moving higher. Then indecisiveness. This over here is where we wanted to see this bullish engulfing. So breakout of this 960, the pullback. This candle over here, great. It found support. You can see 2 consecutive days of support above a prior resistance area. Okay, prior resistance. This candle here, the next set of candles had to remain above the 960, but a bullish engulfing to confirm breakout, pullback, continuation in the direction of the breakout. In this case, would have been up. So you take your lows here in May, swing high, swinging. See here, this candle here, or the next set of candles after this day, should have been engulfing support. It failed to do that. Bearish engulfing, underside, then we saw further selling to the downside. And you could actually draw on your Fibonacci retracement areas from these lows in May to the highs we saw here in June, early June. And you can see the 23.6 is smack bang on the 960 major support and resistance level, below the 38.2 where price actually moved towards, broke and traded just short of the 50% line we saw before. We saw 1, 2, 3, 4 consecutive days of support, and then price reverting back up towards that 23.6, which happens to be the 960, and trading higher over 2, 3 consecutive days, but very indecisive. Again, spinning top, spinning top, spinning top. We want to see when you see a spinning top or a doji, it's a clear indecisive candle. We want to see a decisive candle after indecision. Indecision, we don't trade indecision. We want to trade decision. So we wait patiently for a decisive candle. The decisive candle we were looking for was a bullish engulfing because we're trading above a major support and resistance that we want price to see. Price finding support at this level, and then they're going to be building onto that, heading up towards that 975, which happened to be price support and resistance before. But that failed to materialize because we had on Friday a bearish engulfing, engulfing all of this uncertainty here. 1, 2, 3, 4, 5, almost a full week of uncertainty, guys. And we're trading. Look where price reverted to, back towards a price support and resistance level here at the 38.2, and finding support going into this morning, or the Asian session and the European session open this morning. We are trading above the 950. So daily CTC still looking blue across the board. So this is still positiveness. However, if this is to be a true buying scenario, we do need to see price trading above 960. Otherwise, we're going to see price consolidating as it's been doing for the past month. Look at June. not really going anywhere. It's trading sideways. We don't want to trade sideways. We want to trade momentum. Okay, either down or up. So in this case, if this bearish engulfing is a true engulfing telling us the sentiment is negative, then we do need to see the price closing below 950, which will be the 38.2 retracement area. And then in doing so, we'll tackle the 50% line, which happens to be this prior consolidation area here at 940. Below that will be our second target of 61.8 at just above the 93200, and below that will be the 78.6, which a lot of people don't know about. Another fib extension. There we go, which will bring us back towards price support and resistance levels, and funny enough, prior major support and resistance levels at the 920 here, as well as the institution moving average. Okay, so very important. If we see price consolidating here today, then we could see very much a reattempt of the underside of 960. If not, we see price breaking low because there's a bearish engulfing, guys. There's a massive engulfing candle there. Do you want to see price now trading lower than 950 or closing a bit lower than 950 to confirm that sentiment is still looking negative for the foreseeable future? Last pair of the day is US dollar Japanese yen. Let's have a look at the weekly. Very indecisive as well, moving slightly higher. You can see for the past week or so, or past couple of months, price has been trading at the underside of 80. Now, why 80? Well, 80 happens to be a major support and resistance level, guys. So make a note of it. Back in the day, well, recently, if I just zoom out, you can quite clearly see that through October, November, December, through January, October, November, December of 2010, through 2011, January, February, March, April, May, right through into July, a major support. Okay, and above that, the next one was at 8400-ish. A lot of hesitation through here, and you can see through the start of 2011, a lot of resistance, or resistance as well for this pair. So a lot of hesitation. So once price had broken the 80, psychologically price, or individuals out there, including the institutions, would have been looking at 84 as a strong target one after a break of 80 to take profit from. And sure enough, as we headed into 84, price hesitated and fell away. However, with any breakout, you're going to see a continuation, then a pullback, and that pullback took us back towards the 80. This consolidated pullback took us back towards 80. However, we wanted to see 80 acting as a major support. We did see that for 2 consecutive weeks. However, on the 3rd week, we saw that indecision. Price trading lower and very indecisive. And then on the 4th week, very indecisive, and then giving us a clear bearish signal here on this one. A lot of this is a bearish engulfing, taking away these 2 indecisive candles at the underside of a major support and resistance level, and price reverts to the downside. In doing so, trading towards the 61.8 and eventually the 78.6 area before we saw price bouncing at that area and retackling the underside of the 80. Okay, 78, you can see 78.6 here of this low in Jan, all the way up to the highs in mid-March. You can see here at 77.70, price finding some psychological support and moving higher toward the underside. So if I go to my daily now and put in those areas as the 80, just draw a horizontal line anywhere in the chart and just change the actual value, make it nice and strong so you guys can see it. So 80, there we go. If I zoom out, notice how much price has been trading at the underside of this 80. The more trades on the underside, the more negative it looks, and sure enough, the CTC has confirmed that. Very negative sentiment intermediately from this highs here at the 8400. Put your major high in. You can see quite clearly 8400 on our weekly, very strong price support and resistance, and you can clearly see that price hesitated at this area. Loads of dojis, indecisive candles, and bearish engulfing, and price reverted to the downside. But you can see recently that price hasn't really moved away from this 80 once it broke it, and you can see price has been hanging on quite strongly to the underside of 80. Notice where the CTC is, guys. The moving average, the institution moving average. And right up until just recently, if I zoom right out, you can see that this is a days. You can see right back here to 2010. Notice the CTC, or sorry, the institution moving average, the green line over here, for example, was trading above price, which is a negative signal. Okay, on a daily, the 200 period moving average above price, acting as a ceiling, a resistance level. And notice how red the CTC is on either side. Okay, very much negative. Yes, we had 1 or 2 blue days, but you're trading at the against major resistance, so you wouldn't be looking for potential long positions. Up until recently, however, we've seen here in February, for example, mid-February, we saw a break of that, and in doing so, trading above the institution moving average for the first time since for a full year, in fact. And since then, trading higher. And notice you see that price now is remaining above the institution moving average. So long term, this is quite positive. So the US dollar has been gaining a bit of strength against the Japanese yen just recently. And as long as it stays above the institution moving average, it's still positive. However, intermediately, on the shorter time frame, it's finding resistance at this 80, which is holding back this positiveness growing, this growth potential to the upside. Until the 80 has been broken, the short term, the intermediate short term is still looking negative, because as long as something finds resistance somewhere, it's going to actually end up being negative. It's got to get above the 80 as soon as possible, and doing so, finding a major support and moving away from it, and I can guarantee you everything will start to go in our favor. You can see two parts of our strategy are in favor now. We have a blue arrow, blue candle. However, our CTC on either side, which is the most important part of it, still remains negative. So it's telling us the sentiment is still favoring negativity. So we've got to see that being breached if this is to be positive. So a break above 80 and a close, and a week trading above the 80 would definitely concur that we should be seeing long-term upside. Until then, we're still looking for negativity because we're trading below a major support and resistance level, which happens to be our 80. Okay, guys, so these two parts over here, this is the beauty of the CTC, the counter cash system, is that yes, it's given us a buy signal, but it's not a genuine buy until such time as it's trading above this major support and resistance level. We don't want to be trading fake outs. Hence this. See this? Blue, blue. However, it didn't go blue above here. So why would we be buying here if it's trading above? See the beauty of it? Okay, so you got faked out. It's faked into trades there, guys. Guarantee there were some idiots out there that were trading this and got faked into it. That's the beauty of it. So until such time as we get blue, 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 and we're trading above the 80, and then we'll be trading above all our moving averages, then we pull the trigger. Until such time that happens, we stand clear. We look for that negativity because we're still finding 1, 2, 3, 4, 5 consecutive days now trading under the 80, which happens to be a resistance level in this case. So we should be looking for potential downside to be still in favor on our intermediate charts. Okay, and if that does occur, then we should be tackling these areas to the downside. So we look at our February retracement. So the low here we saw in February to the high we saw here in early March. There we go. Then we look at our February retracements. 23, you can see nice pull back towards that, a lot of support. Back towards the 38.2, hesitation on that area. Back towards the 50, which coincides with that 80, major support and resistance level on our weekly and daily. Notice it's spending more time, price is spending more time below 80, below the 50%, and hence the reason why it's negative. Okay, but you can see prices hasn't been trading below the 61.8, which coincides with the institution moving average here at 79. It's got to get below all of this to be long-term very negative. Okay, so as long as it's trading below 80, then that short-term negativity is looking favorable. Well, the short-term consolidation is still negative because we're trading below a major support and resistance level. Okay, guys, very important. So that means our intermediate time frames, it's negative, very negative. Resistance, 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 resistance. There's no positiveness there. Okay, very small trading ranges for the past week, all indecisive. Okay, so we won't be looking for any buying opportunities when there's clear resistance here. Only when this 80 is broken, then we can start looking for potential upside. Until then, we're looking for negativity or resistance, and then we should be targeting a break of 7900 and the institution, and then we'll start seeing our candles going red. Then we'll get our red arrow, and then everything will still be red above the board, and we should be looking for downside. So back towards the 78.6, which would be our ultimate long-term target if that's the case. And overall, we can go all the way back down now to these lows in February that we saw not too long ago. Okay, so that's the outlook, guys, for this week. Make a note of it and jot them down. These are major support and resistance levels, very, very important, because they will dictate what's likely to occur for the remainder of this week. So I'll leave you with that. Have a look at your news to see if there's anything out there that's definitely going to be moving the market this week. Okay, it's going to be first Friday of July. I had to spit that one out. First Friday of July, so it's going to be non-farm payroll. If I'm not mistaken, just look at your news analysis for this week. So look at the calendar, and I can guarantee you that the first Friday of July, let's have a look here, Friday the 6th of July, what do we have? Friday the 6th of July, we have non-farm payroll. So a lot of news So Thursday and Friday will be days when we start getting the ADP non-farm employment change, etc. like that, unemployment claims. Then we go into Friday, we have unemployment rates. Non-farm, very, very important. First Friday of every month, we have the non-farm payroll figures. And they can be quite, well, they are very, very important to the actual price action. Okay, so make a note of it, guys. Have a fantastic trading day and enjoy the remainder of your week. And I'll see you first thing tomorrow morning. Until then, trade serenely.